Now we're going to go back to the German election and take a look at what it means for the country's economy. We're joined now by Thorsten Polleit. He is the German chief economist at Barclays Capital in Frankfurt. Good morning, sir. And let's talk first of all about the economic impact of the elections.
Good morning. Thanks very much for inviting me. I think it's a very positive sign. The Conservative-Liberal coalition is most likely to pursue a much more market-oriented reform policy compared to what we have seen under the Grand Coalition government in the last 4 years. So having said that, the most important signal clearly is a more pro-business oriented policy in Germany.
When will we see these tax cuts that Merkel is promising?
As you know, we are having, problematic public finances at the current juncture, and that needs to be addressed. The Conservatives are envisaging tax cuts as from 2011. The Liberals would like to go ahead with a reform of the tax system, and at the same time the Liberals are against running up further deficits. So it boils down, I would say, to a policy that tries to make the tax system more transparent, less complex, but there will be tax cuts not earlier than 2011.
Now, how is Merkel going to finance these tax cuts? We talked about the deficit.
Yeah, absolutely. It's pretty clear that under the Liberals there won't be any tax increases, and that means the coalition government has to cut down on public spending in the years to come. That is a politically challenging task, but I would say, given the strong political support in the upper house of parliament, the Conservative Liberal government is in a position to do so. And having said that, that is also a very positive sign looking forward.
Now, Thorsten, are you making any changes? Are you upgrading your economic forecast for Germany as a result of this election?
I think looking further down the road, we are starting to penciling in a deficit which is less severe starting as from 2011. In the short term, I think we stick to our forecast. GDP is going to contract around about 5% this year. It's going to move towards 0% growth next year. But having in mind that the Conservative Liberal government is about to implement reforms, we are going to become more positive about the long-term economic developments and the return on investment in Germany.
Okay. We thank you for your thoughts. I've been speaking with Thorsten Polleit. He is the German chief economist at Barclays Capital in Frankfurt.